Without a doubt, not even close, the most frequently asked question we got over the past week has been, is gold a hedge versus stocks? And the simple answer is no, but let's go a little bit more deeper into this. So 2 lines on the screen. You have an orange line, which is the S&P 500, and then you have a blue line, which is gold, or gold futures in this case. And the correlation between gold and stocks is actually quite a bit more complex than people think. So it requires a little bit more perspective. And I actually recorded a podcast on this that you should be able to link to, I think, down below or somewhere here. That goes a lot more detail on this than just in this short few minute video. But let's get to the point though nonetheless. So you can see that, for example, since 2009, so great financial crisis bottom in the stock market. Again, the stock market here is represented with the orange line. You can see there was a huge bull market in equities, and essentially gold too has had a pretty big move. Where it gets a lot more frustrating for people who own gold is kind of at the point exactly where they think gold should be a hedge, which is when equities fall. So let's have a very simple look here and look at, for example, during the initial phase of the sell-off in 2007 into roughly September of 2008. At that phase where risk came into the market, meaning people were forced to sell their stocks, that's again the orange line going down, you saw gold also decline. You saw gold decline quite meaningfully. Ultimately, gold went back up, and it actually went back up before stocks did, but it didn't really provide any real hedge. If we go back to even before then, let's go back to, for example, the year 2000, the peak of the internet bubble, and here too, I know it's a little bit difficult to see, so I'm going to try to adjust this a little bit here. Let me do this. So again, orange line is the S&P 500, and gold is the blue line. So let's just focus at this juncture here. So you can see that S&P went down, and ultimately gold did rally, but during the actual risk-off phase, meaning when risk came into the market and stocks went down, gold did not actually go up. So is gold a hedge versus stocks? Yes or no. It's just not a good hedge when risk comes into the market for a real equity sell-off. So, when momentum starts to turn bearish, that phase is typically when exactly people think gold should be a hedge for stocks. That's typically when it's not a hedge for stocks. Hope it helps, and we'll see you in this week's research call. This week's research call, very cool topic. I look at algorithms, and we show you how we can track when big institutional investors are coming into the market or leaving the market, and how we can jump on the back of their big moves. Very powerful. Bring a pen and a piece of paper, and we'll see you there.